Hello, everyone. So, we now have to start with Companies Act 2013, and basically, we'll start with first few basics about company before we step into the real and bare act, right? But even before that, I have already told you a lot of things about how you should approach law and how you have to, right now, as a student, what you have to do as you embark on this journey with me, right? But there is one more thing that I want to tell you because although as we progress into the classes there will be a lot of things flowing to you, right? Today ma'am is saying this, tomorrow ma'am is saying this, of course, not ironical things, but a lot of advices and guidance will flow. But because we will be starting with the core content today, you should be knowing what you have to learn and what you don't have to learn, because CMA inter law syllabus is huge, right? So, without making you anxious, there is a process how you read law, and it's very important to first understand. Right. Now, when I say understand, you have to think and you should be knowing that, okay, this is a particular topic which is there in my syllabus, right? So, this is something that I have to read and I should know what it talks about. I should conceptually understand what it talks about, but then there is a limit. So, this is given in my syllabus. How much should I study so that I understand? Right. So what you should study, what you should not study, all those pain, all those tension, you don't have to take. Whatever I am telling you, every minute detail, whatever I am telling you, there is a purpose why I'm telling you that. And for understanding part, you will all take that. Okay, that is the first thing. The second thing comes, okay ma'am, we have understood the things, what to learn, right? Because learning is very important in law. You cannot learn the entire content, that is for sure, right? So, what you have to basically learn, I will tell you what you have to learn. In every topic, there are certain things that you must learn, because if a question comes from that particular topic, these are the things which you have to write in order to get marks. Okay, so what you have to learn, as we progress, I will be guiding you, and gradually you will understand what exactly you have to learn. In a lot of chapters, we have also marked specifically in bold and underlined certain keywords, right? So how you are going to learn the core provisions, that you will basically get from the chart book as well. That, okay, the chart book has everything has been summarized in charts form, right? So these are the core content of this particular section, and this I must learn also. After I've understood the section, I must repeat it 3 to 4 times so that I learn this. Okay. The third thing is presentation. So, how you present, what you present, you will be taught. Don't worry. So, I'll make you understand. I'll tell you what you have to learn. If you revise the way I tell you, and your attention, you have an undivided attention in the class, then half of the learning part, or I should say 70% of the learning part, will be done in the class itself. So you'll have to take only the pain of that 30% learning. The presentation, of course, I'm going to teach you in ways like there will be men's practice. Okay, that's all I can say, right? And thereafter, you have the day, right? So, how you utilize those 3 hours. So, there will be a lot of guidance which will flow within the classes, and even after the class you have to keep yourself subscribed to the channel, because there will be a lot of guidance videos which will be flowing. Secondly, if you are talking about amendments, because this is a subject which keeps on changing frequently, maybe some rule is changed or something gets changed, right? So, how do you cope up with amendments, ma'am? As our batch progresses, till the time whatever amendments comes, they will be incorporated in the classes. Post that, if at all any amendment comes, you don't have to worry about it. You will be notified for the same. You will be taught the same. Okay, so you don't have to be worried for the amendments. And I wanted to tell you one more thing, right? The MQPs, right? Till date, they have been incorporated in our question banks. After that, the MQP, whichever comes, will be incorporated in the next batch which is recorded, right? In the next edition of books. So that, of course, your attempt MQP, or maybe if you're appearing for December, then June, you have to do it. So, ma'am, won't it be taught by you? Of course, we will have videos for the same also on our YouTube. Okay, so you don't have to worry for anything, basically, right? All you have to do is follow the guidance which is being told to you. It is years of experience, not just my experience, it is this experience of thousands of students who are connected, who share their experiences every day. It adds on, and I believe I can deliver something good. I can guide you, I can be your mentor. That's why I'm here. So just follow whatever has been told to you. In case you have any doubt or any query, you can reach out to the WhatsApp number which has been provided by the team. Okay, so we'll begin. Fine. So, what do we mean by a company? Right? What do we mean by a company? When I say a company, now what you have to do is you have to open your copy, give heading Corporate Law Companies Act 2013, and just begin scribbling. Okay? So, company has a meaning in general, and then there is a definition according to Companies Act. According to Companies Act 2013. So, what is the meaning in general, which is never asked in examination? If at all you will be asked, you have to write this particular definition, and thereafter there are some characteristics or features of company which probably you might have somewhere read in business studies. So, characteristics or features, and then there is a concept called as corporate wheel. Okay, so this is what we are going to read in today's class. Fine. So when I'm talking about the meaning of company, there are certain people who are coming together and who are going to do business together. Right? So they're coming together. It is a voluntary association, not a forced association. So voluntary means what? By choice. Right? So everyone wants to do this. That's why they are together. Association is a group of people. So it is a voluntary, that means they want to, right? So it is a voluntary group of people who have come together to achieve a common objective. All their objective is that, okay, we want to set up this particular factory, we want to sell this cotton, and we want to earn profits. That is what their goal is, right? So this is called as company. This is what? Company. This is a meaning in general. Definition we'll read later. Okay. Now, I have already told you that if, let's say, there are two friends, Rahul and Anjali. Okay. Now, Rahul and Anjali decide that we want to start up a business. So, they have a great business idea. They have a great business idea and plan and everything. Now, they think that, okay, we are two of us. So we cannot go for proprietorship, right? That is also an option, but proprietorship means what? Like there is a single person who has opened a shop, right? He's doing business, proprietor, sole proprietor. That means a single person who himself is the proprietor of his business, who himself is the carrier of his business, right? So he is doing the business. The business is in his name only. He and the business, they are not different entities, but they're the same thing. Right? So what happens in a proprietorship business? In a proprietorship business, if I'm taking loan from bank, if I'm not able to repay that loan, what will happen? The bank can seize my home, they can seize my car, they can take away all my properties, because for the bank, the business is no different from the proprietor. So proprietor business, it's all the same thing. It's you only. Right? So that is what happens. Right? When I talk about partnership, in partnership, again, if you take a loan, there are two of you. So both of you are liable and bank can attach, or bank can seize your assets, your house, your car, or whatever it is, right? So, well, they can go for partnership also. There is another something, a new concept called as LLP, which is somehow a hybrid. Like it is a mixture of partnership and a company, right? So when we read about LLP in our syllabus, then we'll read about LLP more, right? And then there is something also called as company, right? So they have broadly these options to start a business. Rahul and Anjali, Rahul and Anjali, when they decide to start a company, what is that they get? What is the basic type of advantage that they get over these type of businesses? I have made a video, right? So basically we have a character called as Bunny. Okay, so Bunny is in search of a lot of things, and Bunny will take you through this basic concept. So let's have a look at this first. Okay. So he's Bunny and his father. His father is constantly trying to tell him, do something, do something. So he's decided, okay, I'll start a business. And the first option that comes across, okay, I'll start a proprietorship business and I have somehow 1 lakh rupee. I will put it into retail stationery. But then the funds get short and he looks at that honest bank and decides, okay, let me take a bank loan to expand my business. So he took a bank loan of 5 lakh rupees to expand his business. But what happened? Heavy losses. Oh my God, he is devastated. Now he invested just 1 lakh, but he has to repay 5 lakhs to bank because all is that is the money has sank, right? So, because proprietorship is not a separate legal entity, now he's walking on the road and unfortunately, boom, he dies. Now, the business ends with the proprietor because the business is no different from the proprietor, right? So, he looked for the second option. He's just imagining things, right? So, he started partnership business with Honey with a capital of 50,000 each. Now, again, they want to expand business. So, what will happen? Loan again, loss again, liability again. So, unlimited liability is something which exists even in partnership. So, he calls us, right? And we will give him a solution, right? Okay. So, now you must have understood that company gives you an advantage, and the biggest advantage is limited liability. Limited liability. So gradually we will see it has a corporate personality, there's limited liability, there's perpetual succession, this has transferability of shares. It also has few disadvantages which we'll talk about, but first of all I'll take you through the characteristics of the company. Characteristics of the company. So you open your copy and start writing, right? Features or characteristics of company. What is it? The first one, separate legal entity. Separate legal entity. Now, what exactly does it mean? Separate legal entity. See, company is basically an artificial person. It is not a natural person. Fine. So, separate legal entity and artificial person, whatever you may call it, right? There are basically two characteristics. You can merge it into one or you can write it separately also, right? Now, what basically it means that the company is entirely different from the ones who are incorporating the company, from the ones who are investing in the company, or the ones who are managing the company. As we go on, you will understand and you will learn that if there is a proprietor, let's say we have Mr. Rahul and Mr. Rahul is starting a business. So what do we do? What entry do we pass in accounts when we say that? Bank account debit to proprietor's capital, right? That is what we say. When there is partnership, we say bank account debit to partner's capital, right? Whoever the partner is. So when we are starting with company, there will again be capital because to start any business you need funds, and that is what is capital known as, right? So here also in company also you will be needing funds. Now this capital is known as share capital. Why share capital? because it is being given by shareholders. Who are shareholders of the company? They're nothing but the investors of the company who have actually invested into the company. The entire capital of the company is divided into small, small parts. When we read the chapter of share capital, you will have a very good understanding about the same. But right now, you have to understand that what is share? It is the smallest unit in the capital. So if the capital, let's say, if the share capital of the company or the fund requirement of the company in terms of capital is 1000, and there are 10 persons who have started this company together, right? So there are 10 investors in the company. 10 people who have invested their money in this business form of organization, which is called as a company, right? So these 10 people have invested an amount of 10 each. So one person has invested maybe 100, and 100 into 10 comes out to be 1000, right? So that is the smallest unit, right? So that means if I say that, okay, I need 1000 rupees, maybe one person doesn't have 1000, but if I go to 10 different people and say, give me 100 rupees, give me 100 rupees, give me 100 rupees, they're all willing. They all want to grow their money. They all want to start this business. Maybe they don't have the time to be involved in the running and functioning of business, right? But they have the funds so they can invest in the company. So when we talk about this beautiful form of business organization, company, it is entirely different. When we talk about small companies, let's say Rahul and Anjali are opening a company, well, they can invest in the company. When they invest in the company, they are shareholders. When they want to run the company also by themselves, they want to take decisions, they want to actively participate in the management of the company, they're also directors of the company. Okay. So one step at a time, we cannot learn all the concepts in one go. So we will go on gradually, but you need to know certain basics. Okay. So when I'm saying separate legal entity, as in the case of proprietorship, there is no separate legal entity. Rahul is as good as his business. But here, if I am an investor, I have invested my funds, I have few shares of Reliance Industries Limited. Is Reliance Industries Limited same as Shivangi Agrawal? No, I wish it was, right? But it is not. It's entirely different. It has its own independent corporate existence, which is very different and distinguished from the members who have actually constituted it. Maybe I was a member in the initial formation of the company, or maybe I have acquired shares later, doesn't matter, right? It's very different. It will be called as the name Reliance Industries Limited only. It will be different from its directors. It will be different from its members. Okay, so that is the first thing. Second is artificial person. Artificial person, I've already told you, we are all natural persons. We come into existence by birth. Company also comes into existence by legal birth when it is incorporated, and it dies when it is dissolved, right? So it is an artificial person. It has a lot of benefits which any artificial person or any legal person gets, but it is an artificial person. Can it marry? No, a company cannot marry, a company cannot be divorced, right? A company cannot actually see, speak, because it's an artificial person, of course. The third one is limited liability. Now, limited liability is something which is a wonderful feature. Wonderful feature, as we have got that from the video also, right? That, okay, if I am a proprietor, I took bank loan, I'm liable not just for the amount that I have invested in that particular company. No, my company ran into losses. Whatever amount took I from the creditors, they're all lost. Now I'm responsible for everything. So there is no limit on my liability, right? It goes on and on and on and on. But when we're talking about company, there is a limit on the liability. The limit on the liability of the members of the company. The liability of the company is unlimited. Yes, yes, yes. If a company has taken a bank loan of 5 lakh and all that went somewhere into losses and all, the company is liable to the bank to pay 5 lakh rupees. Its members are not liable. So the liability of members of the company is limited. How is it limited, ma'am? It is limited to the extent of unpaid amount on shares held by them. We will look at the classification, the different types of companies, wherein we will see the company limited by shares, the company limited by guarantee. But right now, Mr. X. Okay, Mr. X agreed to take 100 shares of the company at the rate of 100 each. That is, he agreed to invest or contribute 100 into 100, which is equal to 10,000 to the company. Okay, so this is the amount that he has to pay on shares held by him, right? Now, if I hope you all are writing this along with me, write example and just write this with me, okay? If Mr. X has paid only rupees 50 per share, that is only rupees 5,000. His liability is equal to 100 shares at the rate of 50 each, because he has paid 50 rupees, he is yet to pay 50 rupees. So his liability is 5,000. That is, his liability is limited to the amount of the amount unpaid on shares held by him. Okay. He or Mr. X or the shareholder in no case can be called upon to pay more than this particular amount. It does not matter that the company has taken loans of 5 crore, the company has to pay somebody 10 crores, 100 crores, it doesn't matter. If Reliance Industries Limited, in which I have invested, you have to understand, because now you're going to be the professionals, right? So you have to understand and you have to be familiar with the term investor. Right? When we're talking about shareholders, they are all investors in the company. They don't own the company actually. Right? They don't actually own the company because the company is a separate legal entity. Nobody can own it. There cannot be basically any owners of the company, or although we say it in general that shareholders are the owners of the company, but ideally they are not. Right? Because company is a separate legal entity and every shareholder is a separate legal entity. And every shareholder who are actually the members of the company, what is the difference between members and shareholders? Also, I will tell you, and gradually you'll know that, right? But right now they are the members, right? Shareholders, members, whatever we are calling it synonymous, right? Now, they can be called upon to pay certain amount, but only this amount. So they have a limited liability. No matter what indebtedness the company runs into, we are not going to be liable for the same, right? The next one is perpetual succession. Next one, 4, perpetual succession. Now, we all know that company is not a natural person. Company is an artificial person. So, of course, company will not die, because natural persons have natural death. The company will not die. So, company will go on and on and on, no matter who comes, who retires, who goes, right? So members may come, members may go, but the company goes on and on and on till it is actually dissolved, till it is actually wound up, right? There is a winding up thing which you will understand. So company is being incorporated, company, then it goes into winding up and dissolved, right? So otherwise it goes on and on and on. Fine. How the members change. Dhirubhai Ambani was there. His shares were transmitted to the next generation. The next generation shares will be transmitted to the next generation, or maybe they will sell the shares to somebody else, etc., etc., etc. Ratan Tata, sir, died, right? What will happen? The company will be shut down. No, the company will not be shut down. It will go on and on and on, right? Of course, there might be some shares up and down. There might be certain things which gets affected by somebody so senior in management who's going, but of course it will go on and on. So it doesn't matter who actually started with this vision, who started with the company, but then it goes on, right? Okay. The next one is separate property. Separate property. Now, since the company and the shareholders are not the same, right? The company is very different from the persons who have invested in the company. So, whatever property is of the company will be in its company's name only. So, company has the right, it can acquire the property in its own name, it can sell the property in its own name. Like supposedly, the company has to buy certain furniture, okay, or it has to buy a particular laptop, right? It will be bought in whose name? It will be bought in the company's name only, right? Why? Because it belongs to the company. It does not belong to any shareholder. The shareholder cannot pick up the laptop. Oh, it all belongs to me. I have invested in this company. I am the owner of the company. Anything and everything which is there in the company, it belongs to me. No, there is a whole different process. Nothing belongs to you, right? Okay. So members of the company can in no way claim ownership of company's property. Company's property is different, their own property is different, and the company has full right to acquire, own, dispose of, transfer properties in their own name. Clear? Fine. The next one we have is common seal. What do we mean by common seal? What is common seal? You might have heard of it, you might not have heard of it, doesn't matter. Common seal is like a stamp. Okay. Now, because company is an artificial person and company cannot basically sign, right? We all know that company does not have those two hands that it can draw a signature or something like that, right? So there was earlier, there was this common seal which was mandatory for every company, that every company must have this common seal, which is kind of a stamp which is going to be kept safely, and then on every document, when you are coming to contract with a company, this company is rendering the services of interior designing. Supposedly there is a client which comes, we enter into a contract, so in that document there will be that stamp which is common seal. Okay. So that was used by the company for affixing in all the documents, any contract, etc. Right? Because the company cannot physically sign on the document, so this was used. Now what happened is, earlier mandatory for fixing on, or rather I should write for affixing on all docs. Now, after Companies Amendment Act 2015, it is optional. So some companies still have the stamp, some companies don't have the stamp. Optional. If companies, I should not write like this actually. If companies have this stamp have this common seal, affix it. If not, documents to be signed by two directors or one director plus CS, company secretary. Now, who is the company secretary? You all know that, okay, there is something called as company secretary also, right? You may not know the details, right? You may not know what exactly they are doing, how and which companies have to appoint a CS and all that. So you don't have to know that right now, okay? But if the company has a company secretary appointed, then one director and a company secretary will actually sign the documents if the company does not have common seal, right? So all the certificates are there, contracts are there, bills are there, whatever it is there, it will be signed like this. Fine. Okay, the next one, 7th, transferability of shares. Transferability of shares. After common seal, what comfortable word you can write over here is the official signature. So this way you can actually remember this well, official signature. Now, when I am saying transferability of shares, what does this actually mean? Shares are what? Shares, I already told you that whatever capital is there in a company, it is not that, okay, we say that Mr. X has contributed 50 lakhs and Mr. Y has contributed 50 lakhs and then there is 1 crore in this partnership. No, it is not that simple, because when we are talking about company, there are a lot of people who invest in this particular form of business organization, right? So many people, right? Somebody has given 500, somebody has given 5 crore, somebody has given 50, somebody has given 5. It will be very difficult. So what has been done is that the share capital has been divided into smallest unit. Like example, if share capital, the entire share capital or the requirement is, let's say, 10 lakh rupees, right? So what we can do is each share is equal to or is of rupees 10. Now what will happen? There will be 1 lakh shares at the rate of 10 each. Now supposedly I want to invest in this particular company, but I have only 1000 rupees. So what I can do is I can take 100 shares at the rate of 10 each, right? So I've invested 1000. Now if I am in need of funds and I want to withdraw that, what I can do is I can sell maybe 50 shares. I can sell at the rate of 10 each. So 500 rupees I get, right? And if I'm selling my shares, there will be somebody who is buying those shares, because ultimately company is in need of this much capital and they have that capital intact. Somebody is selling their share to somebody else. That means the shares of the members can be transferred to one another. Can be transferred to one another, yes or no? So shares in the company are transferable. Shares in the company are transferable. Although we have different types of companies. We have public company, we have private company. So when we talk about public company, the shares are freely transferable. But when we are talking about private companies, there is restriction on the transferability of shares, which we will read. Okay, the next one. Capacity to sue and be sued. What does it mean? It's all about the court, right? So it is a legal person. If it is a legal person, then only it can sue, right? So we have already read this and we have already established this, that yes, company is a separate legal entity. And when company is a separate legal entity, it has the capacity to sue others, right? And somebody can sue the company also. If there is a company which has done a false claim, I have run into losses because of that particular company, I can immediately submit a petition in the court in the name of company that, okay, I want to file a complaint against this particular company. I need not search for some shareholder or some director, okay, that they are responsible. No, the company is responsible because company is capable of being sued and is capable to sue others also. Clear? So I think this, so far the things are clear. Just a second. Done. There is a case law which has been written, Salomon and Salomon Company Limited, which I will brief you because this is one of the very important case laws, although you don't have to learn this for your examination purpose. So you will write over here, not to be learned for exam. Not to be learned for exams. Okay. So I'll tell you this at the end. This we have already done. This we have done. This we have done. This we have done. Okay. Now, every incorporated company is a body corporate, but every body corporate is not a company. This line I will explain you once I teach you the definition of company, which we'll be doing in the next class. Fine. So straight away, we will go to the next concept, which is of corporate wheel and lifting of corporate wheel. So here you need to understand what exactly is corporate wheel and in what cases the corporate wheel is lifted. See, once the company is incorporated, right, there is a wheel of incorporation. Wheel means, like you can say, there is a curtain which actually shields or which protects, which guards. It guards whom, ma'am? It guards the shareholders, the members, right? The directors also, I would say, right? So what is happening basically, we have first established the concept of separate legal entity, right? Separate legal entity. We know that company is different and the persons who are investing in the company, the persons who are contributing to the capital of the company, right? Who are the shareholders or who are the members, or eventually the persons who are running the company, the directors, right? They're very different from the company. What company is doing, company is responsible for what company is doing. Now, supposedly, I am a shareholder and I am thinking what will be the best interest for the company, or if I am a director, I am supposed to manage the affairs of the company. I have to see, okay, company should enter into this contract or company should not enter into this contract with a perspective that the contract should be beneficial for the company, for all the shareholders collectively. I should not be having any personal interest in that contract. So as long as I'm working this way, as long as I'm honestly doing what I am supposed to do with the fact or with the view that the benefit should come across all the members, it should come across the company, and I'm not thinking about my individual benefit. So as long as I'm doing this, I'm being protected from this shield. If at all some error happens, if at all some problem occurs, the company is going to be responsible. The company will be liable. I will not be liable. Supposedly, there was a contract which the company could not fulfill. There will be penalty which will be attracted to the company. I will not be responsible. So I am being protected. I'm being guarded. I'm being shielded by this curtain, which comes when a company is incorporated. So as soon as the company is incorporated, there comes a curtain between the company and its members or the directors, right? So basically the term corporate wheel refers to the concept that members of the company are shielded from the liability which is connected to company's action. Company will be responsible for its actions. Company will be liable for its actions. If company has to pay somebody a certain amount, company is liable, members are not liable. If company, there is any error which happens and the company has to pay some penalty or pay some fine, taxes, whatever it is, the company is responsible. I am not. The shareholders are not. So whatever company is doing, no matter, you are only taking decisions on behalf of the company, it doesn't matter, but you're taking honest decisions. You are of the perspective that, okay, I'm taking whatever I'm doing to the best of my interest and belief. I'm seeing to the best of my belief and knowledge, I'm doing it for the betterment of company. So as long as you have that honest vision and you're doing it honestly, you're protected. The problem comes when you're doing fraud, right? When you're doing fraud in the name of the company, that means you have taken money from a lot of people in the name of company. That company needs loan, you give me this and that, and you have a very bad intention of not repaying this loan, somehow putting it into fake losses and all that, and then saying that okay, company doesn't have that money. So in such situation, don't you think that the person who's actually doing that fraud should be held responsible? So in that situation, this curtain is lifted. The wheel of incorporation that existed between the company and the members, that is being pierced, that is being lifted, and that is known as lifting or piercing of corporate wheel. Ma'am, we have understood somehow, but what if the question comes in examination, what we will write, what we have to learn, right? Because this is a very common question which has been asked in examination a lot of times, right? Features are not asked in examination, so I have not put a lot of emphasis on the features. And that is something probably you know also, and I've made you write the headings, right? But here, the very first concept, which is often asked in examination. So are you going to write it? The first thing, elaborate the concept of corporate wheel, or what do you mean by corporate wheel? In which cases corporate wheel may be lifted? This is type of question comes in examination. Okay, so what you'll do is you will write in your copy question 1. And then you'll write this question, the question that I just told you, right? Now you have to also write the answer. I'm making you highlight certain things, or you don't highlight, you just keep on marking it. And once the class ends, you have to write this. Okay, so this is the first question, first writing that you will do. I haven't taught you how to write answers, how to present answers. We'll do that eventually, right? But what I'm telling you to write, that you will write. Okay. So this is a kind of direct question which has been asked. If I talk about your exam, the pattern which currently the institute is following, if any change in pattern, of course you will be intimated, right? What happens basically, there will be MCQs. You have to answer them without justification. There is an OMR sheet which is being provided to you, and in that you just mark it. This MCQ is correct, right? Okay, so that is what is being done. So you have 15 MCQs, 2 marks each, right? This is one part. And the other part, you have 2 types of questions. You have case-based questions, and you also have direct questions. Okay, direct questions. You have a choice, right? You can skip 2 questions and you can choose the other 5. Now, one more thing. We are talking about one direct question today, which is, what do you mean by corporate wheel, in which cases it may be lifted? So when it is a direct question, all you have to ensure is that you write in points. You are not going to use long paragraphs. This is the basic piece of advice that I'm giving you right now. We haven't learned answer writing yet. Okay, so how will you write it and what will you write it? Just a second, right? You have to write basically the term corporate wheel refers to the concept that members of a company are protected or shielded from the liability connected to company's action. That is, if a company has any debt or is responsible for any error, it will be only the company which can be held liable and members will not be liable, right? Very simply, you can write this. Okay. In the following circumstances, corporate wheel may be lifted. Now you have to write all these circumstances. Now in this, what you should learn basically, what you should learn. Ma'am, do we need to learn all these case laws that you have written over here? Do we need to learn that? See, I have written a lot of case laws over here. I'll tell you what exactly you should try to learn if you can. Okay? If you can. This one. Okay? Other than that, you have to remember this protection of revenue. You have to remember determining enemy character of company. Right now, you will not be understanding anything, whatever I'm saying. But then protection of public policy, then company formed or company mere sham, when company acts as agent of its shareholders, then avoidance of welfare legislations, then you have right, punish for contempt of court, and there was, yes, prevention of fraud. Okay, so all these headings highlighted in yellow must be learned. If at all you can try and learn certain case laws, then the case laws which I have highlighted in green, try to learn those also. Ma'am, we don't have to learn this Dinshaw and Ekji Pettit. No, that is not something which I would insist you to learn. The other ones which I have highlighted, you must learn. Now, what exactly do we mean by all that? That highlighting part is done. Listen to me very carefully one by one. What if somebody is a shareholder, he is trying to manage a company, and he is doing all the fraud that he can in the company? Do you think he should be held responsible? The answer is yes. The very first thing that we read over here is protection of revenue. Revenue means the government taxes over here, right? So when somebody is trying to evade taxes, right, somebody who is trying to suppress the tax, okay, I am ideally, if you calculate, I am responsible for making a tax payment of 1 crore. But now I'm using unfair means of suppressing tax. So to protect this tax collection by the government, the court may lift the corporate wheel and say, no, you both are not separate legal entity. Write a note. Corporate wheel means ignoring the concept of separate legal. This is for understanding. See, there are two things. For understanding, you have to know that, okay, I need some simple words to understand the concept over here. But then what is going to fetch me marks when I write the answers, right? So that is entirely different thing. So I'm making you write, I'm making you highlight the keywords to get marks, right? But at the same time, this is for understanding. So corporate wheel means ignoring the concept of separate legal entity and treating the members, directors, and company as one person for making them liable for the actions. Okay? So in the very first case, there is basically a person, what he did is protection of revenue. Okay. So we have a case law, Dinshaw, Menekji, Pettit. You don't have to read this case law, so I'll not get into much detail. You don't have to read any case law in very much detail, right? All you have to remember is the conclusion. What are case laws? They are judicial decisions. Now, these judicial decisions doesn't mean we are talking about Indian judicial decisions. No. There can be judicial decisions elsewhere also, right? So this is also not an Indian decision. However, our law has been inspired from that particular decision, you can say, right? So we have seen this before in judiciary, that this case came up and the courts decided to lift the corporate wheel and see that who is doing that and make them responsible. So they treated both of them as one. Okay. Now, there was a person who was earning a lot of money, right? He had a lot of investments. So he was making a lot of money from dividend income, from interest income, etc., etc. So he had to pay very high taxation. So what he did is he formed 4 companies and he transferred all his investments into these 4 companies. Now, the purpose of these 4 companies was just to reduce the taxation, right? Because if all the investments were in his hand, there was heavy rate of taxation surge, everything, right? The taxation of every country is different, right? So don't directly relate to it, but he had to pay high taxes, so he did that. Is it right? No. If you have to form the company for a business purpose, for doing something, and you're transferring one investment for certain things, that is fine. But then you are forming these 4 companies, they're not doing any business. The purpose is only to hold the investments and just diversify or just divide those investments in order to protect taxes. So that is something which is not allowed. Okay. So in what cases you will write what is corporate wheel, as I already told you. For in the following cases, corporate wheel may be lifted. First, how you will write? Protection of revenue. So the courts may ignore the concept of separate legal entity, or maybe lift corporate wheel, whatever you want to write, you can write, when it is used for tax evasion. So somebody is trying to evade the taxes. Fine. You please complete it. Okay. The second one, determining enemy character of the company. Who is your enemy? Do you have enemies? We all have enemies, right? Some are silent enemies, which we consider them as our enemies, but like we don't say it. And some are like, I don't talk to him, right? So that way also we have enemies, right? Now, if I talk about India, who do you think is India's enemy? Okay, let's not say that, right? But then, if the country is at war with another country, let's not name it any country. It could be any company, right? Sometimes it could be Pakistan, sometimes it could be China, sometimes it could be whatever, right? We try to establish peace, but there could be situations when the country is at war with another country, right? Now, what happens in this particular situation? There is a company here. Let's name it as China. So there is a Chinese company which is trying to enter into some contract with an Indian company. Do you think this should be permitted when India and China are at war? No. How can we let them earn profits from the same, right? So we cannot let that happen. Why? Because this particular company will be enemy when country is at war with another country, right? Now listen to me very carefully, okay? In India, there is a company which has been incorporated. Okay. Now, this particular company has 4 shareholders. Okay, so 4 people have invested in this Indian company, and all these 4 people are Chinese. Can they do that? Yes, they're more than welcome. Can some foreign people not invest in, not open a company over here? They can. There are many subsidiary companies. You will see a lot of MNCs MNCs are what? A company which operates in more than one nation is MNC, multinational companies, right? That is what we call them. So there is a company which is, let's say, established or incorporated in USA, and it also has established a subsidiary company over here. Can it not? Yes, of course it can. Likewise, there could be a situation, there's a Chinese company which has established a company in India. So when we see that, okay, in India this is established, so this is an Indian company, right? So if we look at only the company, because company is different from its shareholders, so when we look at company, we say it is an Indian company. But when we look at its shareholders, we will be saying that, okay, Chinese are running this company, so this becomes an enemy company, right? So company is an artificial person. Company cannot be enemy or friend. Company is neutral. But when there is a war, we need to check whether this particular company is an enemy or a friend before entering into any contract. So in that situation, the court will see who are behind the company. So the court will lift the corporate wheel to determine whether they are friends or enemy. Okay, so the second one is going to be determination of enemy character of the company. So the courts may set aside the concept of corporate wheel, or the court may lift the corporate wheel to see the real persons behind the company to determine whether it is a friend or an enemy during war. Clear? Okay. The third one is prevention of fraud. Very simple. It was established in the case of Jones versus Lipman. Okay, I am not going to tell you the entire case law over here. All you have to remember is whenever a company is being used to commit some fraud, right? So the company has been established to commit fraud. The court may lift the corporate wheel. Just a second. See, if I, let's say, enter into some agreement with you that, okay, I will sell my land to you, right? Now, I don't want to sell my land to you, and I feel that, okay, this will be breach of agreement. So what I did is I transferred this land to a company. I formed a company and transferred this land to the company. Now I'm saying I don't have that land. How can I sell it to you? So you'll be like, okay, the company has the land. You and a company are the same thing. No, we are separate legal entity. We are being protected by that wheel of incorporation. No, the court will lift the wheel of incorporation. Why? Because you have formed that company for committing a fraud with the person, for improper conduct. So that is prevention of fraud. That what happens in the case of Jones versus Lipman, right? The next is protection of public policy. So we have a lot of public policies, and public anything opposed to public policy cannot be tolerated, right? You have read this before in Indian Contract Act also, and you'll again read it. What are the agreements which may be opposed to public policy? So if any such thing is happening, the court will lift the corporate wheel and look behind the real persons. Okay, then we have company mere sham. Sham is what? The companies which are like only paper companies. They're not doing any business. Supposedly there is a lot of money which people have. So we formed a company and we are saying that this particular company is doing export and import and making money. It's not doing anything. Bullshit. They're all doing some illegal business, right? So they are committing all the illegal business. They're earning money from selling or trafficking drugs, and they're trying to convert that into white money by just, this is only a sham company, right? Only a fake company. It does not exist. It is there on paper, but it is not doing any business. It is only used for doing that illegal work. So the same happened in the case of Guilford Motor Company versus Horn. Okay, where am I saying that? Protection of revenue to prevent or matters concerning law of taxes, court can lift the corporate wheel. Second, if you want to determine the enemy character, right? So when you have to see the persons behind it to determine whether they are friends or enemy during war, that is more important, during war. Okay, so that is the case where corporate wheel may be lifted. Prevention of fraud, when a company is used for committing frauds or improper conduct. Protection of public policy, simply to protect the public policy. Okay. Company formed for fraud or mere sham, right? When incorporation is done for some illegal purpose. Okay. Whether illegal purpose, as I already actually explained you and told you, right? Then the next one is where a company acts as the agent of its shareholders. Now, see, when you are forming a particular company, like when Reliance Industries is being formed, Reliance Industries is different. It is not my agent. I am the shareholder. Maybe I am holding a lot of shares. So it is not my agent. It is doing business. There are a lot of people who have invested in the company. The company has to grow. It does not have to do what I say. The decisions will be taken collectively, the voting will be done, right? Everything will be managed in the manner and in the legal manner it should have been done, right? But what if I have an oral arrangement, oral agreement, or a written agreement between the company and me that, okay, you will do whatever I will say, right? I have invested in that particular company and I have said that the company will enter into those contracts only which I say. So the company is merely becoming my agent. Whatever I say, the company is doing. So is company a separate legal entity? The answer is no. Because whatever you are saying the company is doing, you have made that company your agent. So if there is any such arrangement between the shareholder and the company that you will be my agent for carrying on the business, then ideally they are no different personalities, they are the same thing, right? So when they're the same thing, how can we call them separate legal entities? Of course we have to lift this concept. Okay, the next one, avoidance of welfare legislation. Avoidance of welfare legislation. Welfare legislation means what? The law, the legislation, the law which has been made for welfare of people. Like we have a bonus act. Okay, so we have code on wages which also talks about bonus. Bonus is paid to whom? Bonus is paid to the workers. Bonus is based on the profit that the company is earning. So higher the profit, higher the bonus that will be paid. Now, the company has to pay, let's say, a bonus of 50,000. In order to avoid this legal obligation, because the company is obliged to pay 50,000 as a bonus legally, the company wants to avoid this legal obligation. So what they did is they transferred some of the profits, right, to other companies. They said these investments do not belong to me, etc., etc. So they have tried to reduce the profit in order to avoid payment of bonus, in order to avoid their legal obligations. So when the company is trying to do that, what we will do is, what the courts will do is, they will lift the corporate wheel. They will say, okay, you are a company, you had profit, right? And you had to pay bonus. But what you did is you transferred this profit or that business or whatever to be to another company. Right? In order to avoid payment of bonus. Avoid payment of bonus, right? You did this. So ideally, this company is a separate legal entity and this company is a separate legal entity. No matter this company has transferred profit to this company, we consider these two companies as separate. But if you are trying to avoid welfare legislation, then we will consider you both as same. Okay, so supposedly this company has invested or this company is the shareholder of another company. Can it so happen? Yes. I hope you know, and you should know, this is very basic. One company can hold shares of another company. That is why we say that, okay, Reliance has a lot of subsidiaries. Okay, you might not be understanding the concept of subsidiary right now. Never mind. Okay, so whatever it is, they will be merged. And together we will see the profit, and together bonus has to be made. So you cannot get away with the payment of welfare legislation that you have to, right? So you have to pay bonus. You will be liable for making payment of bonus, right? And who is at fault will be identified. The bigger picture will be looked at. That those persons will be penalized who are doing that. Okay. And the last one, to punish contempt of court. Contempt of court means what? Disobeying. Disobeying orders of court. So if you disobey the orders of court, it is not the company which is disobeying, right? If the company is being sent a summon, then somebody has to be present. If you say company is responsible for its own actions, no. If there is a court order, it must be obeyed by the persons who are managing the company. So who is at fault will be identified and will be penalized, will be imprisoned. Okay, so that is what is going to happen. So if I sum this up, a very important question from examination perspective, what do you mean by corporate wheel? In what cases corporate wheel may be lifted? You will get marks for writing what is corporate wheel, right? And thereafter, more importantly, in what cases corporate wheel may be lifted. So you have protection of revenue, you have prevention of fraud, you have determining the enemy character of company, protection of public policy, company mere sham, company acts as agent of its shareholders, punish for contempt of court, and then avoidance of welfare legislation, right? So you have these 8 points in total. Ma'am, do we learn all these 8 points, or we can learn any 5 points or 6 points? So usually the question is of 7 marks. So should we write only 7 points and we'll get full 7 marks? The answer is no. If you're being asked about this particular question, you have to write all the 8 points. Okay. The most important thing is writing this heading. Okay, but then writing only this heading will not be sufficient. So you always have to elaborate this. If you remember the case law, great. Try to remember it. Even if you don't remember, you have to elaborate this. Avoidance of welfare legislation, where the company is trying to avoid welfare legislation or its legal obligations, then the courts may lift the corporate wheel to see who is actually responsible and to recover that, right? So you have to elaborate every point. You can elaborate it in your own words. That is not the problem, but these headings are going to go as it is. If you change these headings, you're not going to get marks, my dear. It is not there that it is like business study. In the entire law there will be heading and we have to only learn the heading. Please don't get this concept. These are professional studies. In this particular topic, I have highlighted these headings, and these are something that you must incorporate and write to get marks. So today your homework is going to be an answer that you will beautifully write and present for lifting of corporate wheel. Okay, so just after the class ends, you will quickly revise what are the characteristics or features of the company, right? There are certain basics which you must remember about the company that we'll do later. Okay, no problem. But this is your homework, and this you must do. In the next class we will begin this. Okay, thank you.